Setting up your legal structure. In this section, I'm going to go over the different legal structures for your business. You'll also find in the resource section of this section are the advantages and disadvantages of the different legal structures that you're going to learn. And as you know, this is not any sort of legal advice, so please consult a competent attorney if you have any additional questions regarding setting up your business and the best legal structure for your food business. You need to set up a proper business structure to protect yourself, your family, and your recipe from all sorts of potential liability and legal issues that may arise from your business. And when setting up the best legal structure for your business, the size of your business usually determines the type of legal structure to get started with. If you want your business structure to be relatively simple and you do not have partners, you can consider structuring your business as a sole proprietorship. If you have a few people who will join in the venture, consider a partnership. And I'm going to go over the different types of legal structures starting with the sole proprietorship. The sole proprietor business is an individual who owns and operates the business. In the sole proprietorship, there is no legal separation between the business and the individual. The individual enjoys 100% of the profits and is personally responsible for 100% of the debt and liabilities of the business. And a person who wishes to operate a business under the sole proprietorship arrangement must file an assumed name, also known as a DBA or doing business as, in each county where their business is located at. In different parts of the country, it may have a different name, but basically it's an assumed name. And you will need to contact the county clerk to learn more about filing a DBA or a doing business as or an assumed name. General partnership. A partnership is when two or more persons join together in the formation, operation, and management of a business for profit. General partnerships are relatively easy to start. And with this type of business arrangement, all of the partners are liable for all debts of the business. All the profits of the business are taxed as income to the partners based upon each partner's percentage of ownership. And like a sole proprietorship, a partnership must file a DBA or a doing business as with the county clerk's office where they do business. Limited partnership. A limited partnership has two or more individuals. In a limited partnership arrangement, there are two types of partners, a general partner and a limited partner. The general partner has the same rights as partner in the general partnership arrangement. The limited partner is not generally liable for the obligations of the business. The general partners may receive cash and other assets and also incur unlimited liability. Limited partners can only receive the proportionate share of profits as indicated by the partnership agreement. A C corporation. A corporation is a legal entity that has its own rights and liabilities separate from those forming the corporation. A corporation can own property, enter into legal agreements, and can almost do anything a real person can. A corporation has a board of directors, shareholders, and corporate officers. This type of business is subject to more government regulation than proprietorships or partnerships. In addition to having the advantages of limited liability to the shareholders, this type of structure makes the corporate earnings subject to double taxation. In order to form a corporation, articles of incorporation must be filed. A Subchapter S corporation. A Subchapter S corporation, also known as an S-corp, is a special section of the IRS code that offers special tax advantages, including the ability for the profits to be taxed at the individual rate rather than at a corporate rate. A limited liability corporation. The limited liability corporation can be treated as a partnership for tax income purposes and provides the limited liability of a corporation. Tips on working with accountants and attorneys. In your food business, you'll want to add an accountant and an attorney to your team. And the best place to find a competent accountant and an attorney is to start locally. And the reason is you can have face-to-face meetings when you need to. Also, you can interview several accountants or attorneys until you have a personality match. And having that personality match is vital to a long-term success to your business and an open relationship where you can discuss any subject with your accountant or your attorney regarding your business. And I've found it's best to work with someone that you feel more comfortable with dealing with on a daily or monthly basis, assuming that they're competent, of course, but it makes the relationship more enjoyable and they understand your business to a better degree than someone who is basically just answering questions when you call. If you have that personal relationship with your accountant and or attorney, they're going to better be able to understand your business needs, and offer unique solutions specifically for your business. And as your business grows, if you need more specialized expertise, thanks to modern technology, you can always reach out and find someone regionally or nationally who has that specific expertise that you need to take your business to the next level. For example, our main food attorney is based in Washington, D.C., and he's one of the nation's foremost food attorneys. He's very expensive, but he's worth every dime. And if we have any highly specialized questions, I can always call him. He'll pick up the phone, and he's able to answer our questions in a very, very rapid manner. Also, our trademark and patent attorney is based in Chicago, and he has an extensive expertise regarding trademark and patent application, while our general counsel attorney and CPA is based within about 30 miles of our office. So as our business grew, we reached out to specific individuals that offer specific expertise to help our business grow. So as your business grows, you can always reach out and get that specific expertise that may not be available with your general counsel. Good manufacturing practices. When producing and selling food for human consumption, your business must have good manufacturing practices in place, also known as GMPs. GMPs were designed by the federal government to ensure that foods are manufactured, processed, and handled in a safe and sanitary manner. And to operate your food business, you do need to implement good manufacturing practices. So let's take a closer look and learn about a few examples for implementing good manufacturing practices for your food business. First, what is the GMP for your building? Do you have an effective pest control system in place? For example, how often do you spray the external of your home or your business to keep any sort of pests or rodents out? Next, what is the GMP for your production equipment? How often do you clean your utensils and the equipment that produces the food? Next, the GMP for the maintenance of the overall facility and the grounds. For example, how often are the floors swept and wiped, and the walls wiped and the ceiling cleaned? The GMP for sanitation. What is the process for the storage and the removal of any sort of waste from not only inside of your home or business, but also outside of the home or business? Do you have a daily trash pickup, a weekly trash pickup? Also, what is the GMP practices for your personnels regarding hair nets, beard nets, and hand washing requirements? And these are only a few of the good manufacturing practices to consider in your food business. Consult your local health department for a complete review for your specific area. Your business costs. Your business will have both fixed and variable expenses. Fixed expenses usually do not change, such as rent. In addition to budgeting for fixed expenses, you'll need to budget for startup costs. These usually include one-time costs, including equipment, office furniture, any sort of licensing fees if you need that, additional utensils if you need those as well. Variable costs are expenses that change from month to month. Examples include utility bills, ingredient costs, supplies, transportation, advertising, and more. So let's take a closer look at some of the costs in running your business. Estimating food costs. In the food business, you need to estimate the cost of ingredients on a per unit or per dozen basis. Make a list of the ingredients needed for your recipe and then contact several food distributors or grocery stores to compare prices. When first starting your business, you may be purchasing your ingredient list from a local retail grocery store and maybe even some wholesale units. However, as your business grows, you'll want to streamline your ingredient purchases and then have them delivered directly to you rather than you having to go out and buy them from a local grocery store. And a local food distributor will be able to deliver them to your location. Estimating labor costs. In the beginning, you may decide to work for free, but your employees won't. When creating your budget, always include a labor cost for yourself, even if you're not drawing a salary, and your employees as well. Because it's good business practice to have realistic expectations in place from the very start. For example, when estimating labor costs, divide the profit by the hours spent to produce the final product. For example, if it takes 25 hours of labor to produce a $100 profit, the labor cost is $4 per hour. You also need to determine what your time is worth and add in the cost of your personal labor. You may decide to pay yourself $5 per hour or $25, and the amount is entirely up to you. Always consult your accountant to help determine hourly wage estimate. Also, remember, labor cost is more than simply preparation time. Employee time is required for product transportation, purchasing, and record keeping. Although family members may work for free, you should also include a fair and reasonable salary for their efforts too. Estimating transportation costs. Consider the following questions. Will you deliver your products, or will they be picked up? If you're delivering your products, you should include gasoline and other car-related expenses. The next question is a unique vehicle necessary? Will you need any sort of special equipment to keep foods at a recommended temperature while they are in transit? So in estimating your transportation costs, you also need to factor in the cost of the equipment that you may need to purchase, rent, or lease to transport your final product. Estimating insurance costs. Insurance is vital to your business. It can help keep your business secure against losses from fire, illness, ingredient recall, and injury. And talk with a competent business insurance agent to understand the options available. And here is a non-inclusive list of insurance options you may want to consider for your business. Number 1, product liability. This is to protect your business if your product causes injury. Product recall insurance. This insurance is to help cover the cost to recall a product from the market. Business income insurance. Business income insurance will help to cover loss of income if you need to suspend operation if your business suffers loss of fire, flood, or other business income type of loss. Next, auto insurance. Of course, auto insurance is used to cover a car or a truck used to support the business in any way. Next, if you have employees, worker compensation. Next, disability income protection. This is a form of health insurance in case you become disabled. Next, business life insurance. Business life insurance is to provide funds upon the death of key employees, and this may help to offset any financial setback that may occur with the death of a key employee. Additional food business expenses. Ask your accountant to provide you with a list of additional expenses for your business. But here is a brief list to help you get started. First, customers who do not pay. Unfortunately, as your business grows, you may not have individuals or businesses who pay you for the product that you allow them to take on credit. So you do need to factor in any sort of business loss expense. You need to factor in accounting fees, legal fees, any sort of production leftovers, product pilferage, basically people are stealing things from you, any sort of returns or mistakes that you have. In addition, any sort of food wrapping, napkins, and condiments that are used in the production of the product or that you include with the product at the final sale. Any sort of online advertising or offline promotion. Sales tax ID and UPC codes. In addition to permits, which unfortunately usually always require some sort of fee, you'll need a federal tax ID number. It's a 9-digit number which is assigned by the IRS and is used to track your business taxes. And you can contact your accountant to assist you in getting a sales tax ID, or you can contact the IRS directly at irs.gov. A UPC code allows your product to be scanned and purchased at grocery store cash registers. Thus, a UPC barcode is required to sell your product in retail grocery stores. So if you plan on distributing your product to retail grocery stores, wholesalers, or distributors, your product labels will need UPC codes and a UPC number. And if you're operating as a cottage food individual, at this point you will not need a UPC code on your label. But if you would like to learn more about UPC codes, visit the following website, www.gs1us.org. Determining the right prices for your products. How much should you charge? The answer to this question is vital to your success. Do you want to be the highest priced product or the lowest priced product in your niche? The highest priced product usually means higher profit per item, but usually lower overall sales volume, while being the lowest priced product in the marketplace usually means lower margins, but usually higher overall volume in the marketplace. Being the highest priced product or being the lowest priced product, both has its advantages and disadvantages. If you decide to sell your product above the market, you'll need to offer additional benefits to justify the increased price. For example, if your selling price of your homemade ice cream is 25% above your competitors, you should provide a free ice cream recipe cookbook with each purchase, which has a retail value of $5. This could provide that justification in your buyer's mind for paying that additional price. And by having a higher margin, you'll usually have the increased profits to offer additional add-ons with your products. On the other hand, if you're the lowest priced product in your niche, you are competing on price alone, and usually another competitor will come along and offer an even lower price to grab market share. So you need to be very careful if you decide to compete on price alone. So when deciding on the price of your products, consider what similar products are selling for in your niche and talk with others to help determine your final selling price. But most importantly, take a look at your own profit margins. Cost-based pricing method. This method determines the selling price by using ingredient cost, expenses such as utilities, and labor. For example, your fixed expenses are $100 per month, and you work 2 days per week or 64 hours per month, and your ingredient cost is 80 cents per each jar of jelly, and you can make 100 jars in an hour. So how much should the minimum price of each jar cost to cover your costs? Step number 1. Calculate the total hours working to produce the actual product. For example, 10 hours of the 64 hours are spent in actually delivering your product, selling your product at street fairs, bookkeeping, and visiting local grocery stores to purchase ingredients. So, these activities are not included in the production costs. Thus, the total hours to produce your product is 54. That's 64 hours minus the 10 hours not producing your product, that equals 54. Step number 2, calculate the total expenses per hour. Divide your monthly fixed expenses by the total production hours worked in 1 month. In this example, we have $100 divided by 54 hours equals a fixed cost of $1.85 per hour to produce your final product. Step number 3, calculate the ingredient cost per hour. Take the total cost of your ingredients, which is 80 cents per jar, and multiply it by the number of jars you can produce in 1 hour. 80 cents times 100 is $80. And make sure to add the cost of the label in your calculations as well. Step number 4, calculate your labor cost. Say that you want to pay yourself $15 per hour. Step number 5, add everything together. Add your fixed expenses of the $1.85, your ingredients of the $80, your labor of $15, so that's a total per hour cost of $96.85. And step number 6, take the total cost per hour and divide it by the number of jars of jelly you can produce per hour. In this example is $96.85 divided by 100 equals 97 cents. This means you have to charge at a minimum at least 97 cents per jar to cover your costs. Percent food cost pricing method. This method is used mostly by restaurants. The percent food cost method is based on the theory that total food costs makes up about 40% of the final price. So, to set a price for a menu, multiply the food cost by 2.5 times. 40 times 2.5 equals 100%. For example, let's say the cost to produce a deli sandwich is $1.75. Take this total cost and multiply it by 2.5. In this example, the final menu price should be $4.50, and you always round up in your pricing calculations. The percent food cost is ideal for food products that require large labor costs, such as restaurants. The reason is restaurants have a large number of people working in the business, including the cooks, servers, waitresses, and more. And this method can also be used if you plan on opening a catering business. However, in a catering niche, you would multiply your cost by 3 and not 2.5. And the reason for this increased multiple is you have additional expenses in the catering niche, including additional transportation costs, equipment to keep the food warm, and compared to a restaurant, you have more expenses. Target return pricing method. This method is used to set your price to achieve a rate of return on investment, or ROI. For example, say you invest $10,000 into your company and you estimate sales volume for the first year is 5,000 units. You want to recoup your investment in the first year, so you need to make $10,000 profit on your total sales. So you would need a profit of $2 per unit. Value-based pricing method. This method is creating a price based upon the value your product creates for the customer. And this is the most profitable form of pricing. Let's say you sell a loaf of bread that cost you $1.75 to produce, and you believe you can sell your product for $5 per loaf. However, the competition is selling similar loaves of bread for $3. And the way to increase value for your product is you can add a free 1-hour cooking class at your kitchen for each loaf of bread that is purchased by your customer. Now, this is value-based pricing. You offer an additional value to the customer for the increased price point. And the benefit about it is you determine the value of the product in your customer's mind, not the marketplace. Getting your recipes ready for mass production. The key to getting your recipes ready for mass production, either in your home kitchen or in a shared kitchen is to standardize your recipes. This process allows you to keep your costs steady and to ensure all of the final batches are uniform. Standardizing your recipes. Taking a small serving recipe and increasing batch production is as simple as multiplying the ingredients by the final production number you want to meet. For example, if you have a recipe that produces 10 servings and you want to make 100 servings, you simply multiply the ingredients by 10. In addition, make sure you keep track of any changes to your recipe. Even the smallest change to a recipe can have a big impact on the final product. And keep track of everything you do regarding your recipes. Also, remember, it's your recipes that will make or break your business, so keep your recipes in a safe and secure place. A home or office safe usually is adequate for recipe safety when you first get started. In addition to keeping your recipes safe, you also need to keep track of the following information too. And here are some examples of what to keep track of. Number 1, a complete written description of the product. And the reason that you want to do this is you want to have a detailed description that you have written out, fully explaining your product and the visual representation of your product. For example, is it flaky? Is it dense? Also, you'll want to take a photograph of your product at least twice a year. And the reason that you want a visual history of your product is this allows you to maintain the appearance of your product as well as to ensure there's no discoloration of the product from batch to batch. You'll also want to keep a detailed description of the quantity produced by each batch. In addition, you'll also want to keep track of the serving size of the final batch in weight, volume, or number of pieces. And the reason you want to do this is as your business grows, you'll be hiring employees, and you'll want to have this information readily available for them to review after each batch. You will also want to keep record of the exact equipment list used to produce the finished product. This includes the pans, the copper kettles, and any special utensils that are needed to produce your recipe. Is the recipe cooked in metal or glass pans? Keep a list of the order of ingredients that goes in to make your recipe. Also, include the exact brand name of the ingredients used for your recipe. For example, if you use a national brand for the flour, make sure to write that down, because if you buy a generic brand, it may affect the quality of your final recipe. Keep a list of where the ingredients are purchased. Make a list of which ingredients are purchased from which distributor. This allows you to maintain consistency throughout your entire production process. You'll also want to complete a step-by-step instructional manual for the preparation and ingredient combination, cooking time, and temperature for your recipe. Next, create a manufacturing flowchart or an MFC. A manufacturing flowchart shows the steps necessary for your recipe to be produced. This provides an excellent overview of the recipe flow. Product labeling and design. Your product label is the first touch point that your customers have as you introduce them to your brand. And an attractive label is vital to making your product jump from the store shelves or from the sampling table if you're sampling your product out at local street fairs and festivals. And here are some ideas to help you get started in designing your label. Number 1, a good use of your graphics. The overall graphics of your label need to tell the story of your product. Number 2, use bright, bold colors on your label to attract the eyes of your customers. Number 3, show the customer what is in the bottle, bag, or jar by using food-specific images on your label. And number 4, use simple, non-complex layouts and design for your product label. Remember, keep it simple. So let's take a look at our cherry salsa label to see how it conforms with the 4 bullet points that I mentioned earlier. Number 1, a good use of graphics. You'll notice on the top and the bottom of the label, we have a very eye-appealing graphic that not only attracts your eye to the label itself, but it also blends in with the food product inside of the jar. In this instance, we're using a red hue, which blends in with the red salsa and the cherry salsa that's in the inside of the jar. So it's a good use of the graphics using that top image and that bottom image that runs across our entire label. And the second criteria of a good label design is the use of bright images. You'll notice the word cherry, it's a bright red hue. In addition, the word all natural is also a bright red hue. And most importantly, the word salsa is a bright green, healthy hue, which attracts your eye. And also, to the upper left, you'll notice the blue ribbon, which is our national award winner. All of our products that have won national awards, we've placed that bright blue ribbon up on the left-hand side of the label, because what this tells you that this product has won some sort of an award. Next, does the label show or have an image of specific graphics of the food that is in the product? Yes, it does, because if you notice to the left of the word salsa, we have a visual representation of a bright, juicy cherry that's just mouth-watering. So we do have that food-specific image right on the label. In this instance, a bright, mouth-watering cherry. And most importantly, our label complies with a simple, non-complex layout and design because we use a lot of white space. And the latest trend in gourmet food products is the minimalist approach. And that's keeping everything as minimal as you can and utilizing the white space to really make all of your images and text and anything else that you put on your label really pop. So use your white space very, very generously. But most importantly, make sure that all of your text and images and any other graphics that you place on your label are there for a purpose. And make sure to check out the other product label examples that we have in the resource section right below this video, because we have our additional labels that you can take a look at and use as a guide when you design your labels.